you're addressing a robust demand growth pool. And why is that? Because emerging markets represent a large level of population. They represent a pool of people who are growing incomes at quite a rapid clip. And there's a low penetration in these economies for basic goods and services. So you put that together, and what that represents is strong demand, translating to very good levels of revenue growth, profit growth, and how that drops through to shareholders. And remember, emerging markets account for more than 80% of the world's population. It's more than half of the world's GDP. So this is not an insignificant asset class. I mean, it's made up of around about 24 countries. So there's a very wide area of investment opportunities from which we then have to construct a portfolio. It was our first trip, research trip, post-COVID, and so it was significant in that sense. Why India? It was the obvious choice. India is the largest country exposure in the portfolio, so it was on our to-do list very early on. It was wonderful to be back travelling again, and look, just on the ground, the confidence and the vibrancy that I saw from people I spoke to, the companies I met, was really palpable. It does seem as though with India, they've returned to a more normal post-COVID environment. The activity levels have come back, confidence has come back. And I'd contrast that actually with what we're seeing in China today. China's another emerging market country. We don't have much exposure to China, and there's lots of reasons for that. But one issue that they're facing currently is this zero COVID policy the government's put in place. You may have read about that, and what's happened is they're seeing lockdowns still in China across the country in different cities when there's been evidence of COVID infections. India's moved well past that, and of course the issue is that in the case of India, that provides a lot more certainty and confidence for investment and for activity in general, because you can plan your life, you can plan your business. In China, they're faced with literally on-the-spot closures, and that is very difficult for consumers and also in businesses to operate within. India's got lots of other aspects which were appealing. I mean, half the population is under 24 years of age. Now that just means that in the years to come, not only will you be seeing a growing pool of consumers entering the market, but it also means that the growing labour pool is a function for things like expanding the productive capacity of the country. Also in India, what we see is generally low levels of gearing. So for example, in the corporate sector, the level of gearing is probably around a 15-year low. In the household sector, it's also extremely low, which means the capacity for consumer activity is not necessarily going to be constrained by interest rates, by other areas. There's still a lot of capacity for activity levels in general. And also issues like the real estate market in India, really interesting. It's actually at a 20-year affordability high. And that's contrasted to what we've seen elsewhere. I mean, Australia is a great example. And the reason for that is that in India, property prices haven't done much over the past decade. They've been pretty flat. At the same time, incomes have grown at around about 6% per annum. And so you combine low penetration with high affordability. That's a really powerful mix on top of all those other issues. And just lastly, the government itself, Prime Minister Modi took office back in 2014. And over the course of several administrations, they've put in place a number of very important reforms within the country. And what that's done is it's removed a lot of bureaucracy, it's improved efficiency at the economy level of India, and it's raised confidence. So there's been lots of improvements that have happened at the government level, and there's more to come. And they plan more reforms in labour market, in taxation reform, education as well. So we think that the positive tailwinds that India represents, there's still a lot more to come. HDFC Bank is the country's largest private bank. Remarkably, their customer numbers are around 70 million. And they've got a ubiquitous branch presence across India, about 6,000 branches. But they've also been investing quite heavily in their digital network. So basically like an online type branch exposure. So we think that the potential for HDFC to continue to grow and address the population is extremely attractive. Also, financial services are extremely low penetration in India, so there's a long tailwind of growth, I think, ahead of them there as well. And just also bear in mind that with HDFC, they've had a track record where they've been able to grow their revenue by about 20% annually over the last 20 years, and profits as well. And that's been done at a return on their own capital of around 20%. So remarkable growth, remarkable performance, and done so with extremely low credit risk. So they've been able to manage that because they've been very careful at assessing the risk when the customers come on board with the bank. So they look at things like capability to service loans rather than, say, collateral. So it's been a wonderful investment, and we think there's a lot more to go in the future. Another stock in India would be Maruti Suzuki, which is the country's largest auto manufacturer. And they have more than 50% share of the Indian passenger vehicle market. Remarkable. And when you consider that the penetration of cars in India is around 4%, you can get a sense that with growing per capita income, the natural migration for people to move from transport from, say, motorcycles to cars is really quite pervasive. And again, this company has done their growth and managed it over many years at around about a 15% revenue growth annually over the last 15 years, and done it with having net cash on balance sheet. They haven't had to rely on leverage to fund their growth, which is really important because it means you're not addicted to cheap credit. There's a business model which is self-generating. And so they're also addressing the issue of clean energy. And that's an important factor, not just for India, it's important everywhere, obviously, but the government has made that a regulatory concern going forward. So you're seeing Maruti develop hybrid vehicles, electric vehicles. And so they've been very progressive when it comes to thinking about their products, not just today, but also in the future.